Stocks continue their run up, extending the Trump election rally. The Dow, S&P, and NASDAQ all hitting all-time highs. But our next guest says tread lightly. Joining us now is Adam Kobeissi, the Kobeissi Letter editor-in-chief. Good to see you, sir. Okay, so a month ago, you were very bullish. You were saying, don't fight the euphoria. Now you're saying, watch out ahead. Why?
So we've been bullish all year. I think, as you know, as everyone knows, we've been calling for the S&P to 6,000. When we first said it, everyone looked at us like we were crazy. Now we're here. I think if you look at the data, we're definitely not calling for a huge top here or a huge bear market by any means, but things are moving very quickly. We already had a hot run up into the election. And then if you look at the data going forward, historically speaking, in election years, from election day to the end of the year, you end higher around 67% of the time. But the average gain in that time frame is around 2%. Right now, we're almost 5-6% higher, and it hasn't even been a week since election day. So you're talking about triple the average return over the next 2 months or so, and historically speaking, in a matter of days. I think you're starting to see the technicals a little bit oversold. I think it is a euphoric rally. I'm not saying go all in short here. I'm just saying we could use a breather, maybe 100 to 150 point pullback, and then reassess from there.
I don't think you're wrong, Adam. I mean, there's been so much enthusiasm, obviously, surrounding Donald Trump and his policies, as we were talking about in the last segment. Most investors would say they would expect to see a little bit of a pullback. Some people, profit taking, that kind of thing. But ultimately, in the picture from 2025, 26 and onward, with respect to what he's talking about, growth, putting America back on the map again. You're already seeing our currency strengthen. You're already seeing commodities strengthen. He's going to do a lot here domestically. What's the longer term picture?
I think what you're seeing right now is a massive rotation back into risky assets with this risk. There's almost a risk premium priced into everything over the last few months or even couple of years. Between geopolitical tensions to uncertainty about tax laws to you name it, I think markets are now starting to say, let's price that out. You're seeing that in gold. You're seeing Bitcoin at 85,000 now and rising. As you said earlier, we could see 100,000 this year. And I think what long term, what people are saying is maybe we aren't going to have a higher capital gains tax rate. Maybe we are going to have lower corporate taxes. Maybe we're going to have more or less regulation and more business activity. And that's something that the market is rewarding. I will say, no market moves in a straight line higher. I think we will see big swings to both directions. I've been saying this, and I will continue to say it. And I think the Fed also is going to take the spotlight back soon here. We have a couple big inflation reports coming up. We actually had core CPI rise last month. So it's not just, rainbows and butterflies going forward. I think it's definitely looking more promising on the inflation front. The labor market a little bit more shaky, but uncertainty definitely still exists in this market.
Speaking of the uncertainty and the inflation reports that you just noticed, we are waiting for that inflation report, the first one out on Wednesday. The last inflation report, I did note that there was a tick up, actually, an acceleration in core CPI. So we're waiting to see what's going to happen this time around after we just got that another cut, a 25 basis point cut from the Fed just last week. I'm curious to know, do you think that was the right move? And do you have any expectations of what we could see come in December if we see, we're still not close to that 2% goal for inflation?
Absolutely. I think the 25 bips cut was the right move. I think the 50 bips cut in September was the wrong move. I've said that. I said that before the meeting. I said it after the meeting, and I maintain that viewpoint. I think in December now, you're starting to see markets price in a 30 to 40% chance of maybe no rate cut. I'm still in the camp of a 25 bips cut pending the data. But I think the fact that markets have gone from pricing in a potential 50 bips cut at November and December to now saying maybe no rate cut at all in December is the market itself saying, yeah, the Fed might have jumped the gun a little bit here with the 50 bips cut. And now they're kind of in this situation where you don't want inflation to rebound, but you also don't want to pump the brakes and make everybody worry that, oh, maybe the Fed thinks inflation is going to continue to rise going forward. So I think right now we're still calling for 25 bips in December, but if core CPI and core PPI actually continue rising, I think the Fed is going to find themselves in a difficult situation.
Well, Adam, we'll see if we get that pullback that you're talking about. But right now, I think people are pretty bullish, and they might stay that way. Adam, good to see you. Thanks for your thoughts today.
Thank you.